G'day everyone, welcome to this weekend update, and the title this week is US terrific and Australia in trouble, and that's very much the way that things are heading. As anyone that's been following me for some time knows, I'm generally pretty positive, so to make the statement that Australia's in trouble, I don't make that lightly, and the things that are coming together now I guess have been accumulating on the horizon for a little while, but they're starting to really come into focus now. And I think it's really important for traders and investors to understand that a lot of our economy is going to be affected by what will probably become really apparent to everybody in 2015. But more on that in a moment. Let's have a look at the action for the week. And there really wasn't a lot happened, so this won't be a very long video. Nothing much changed. The S&P continued to march ahead, gained another 23 points on the week, and is just super impressive at the moment. So we've just got a series of new all-time highs pretty much every day. It formed another high, and there's really no loss of momentum yet either. When you look at the candles and you look at the momentum indicators, there's really no change. So, for people to point at the charts and say that things are rolling over, they're just seeing things that aren't there. So the S&P continues to look pretty robust. Let's just have a look at that chart. So you can see we did have this dip in late January, and then quite an abrupt turnaround. Got down to the 150-day moving average as it does, but didn't breach it, and just took off again very, very sharply. And I thought for a few days there it might be just starting to pause and roll over around that previous high, but again it just went up and formed another all-time high at 1868 on Friday. Now I guess it's been running for so long, at any point it could turn over, but it certainly hasn't done at this point in time. And the economics around America are pretty good, so there's really no reason why this index can't continue to move up ahead slowly. And the important thing about the S&P index is that it sets the sentiment for the whole world. So as long as the S&P is not diving, then the sentiment around the world is going to be pretty positive. The economic data, as I said, continues to progress very nicely in America. Now, Australia, the index fell by 33 points on the week, so went in the opposite direction to the US. Our reporting season was mixed. There was some good results, but again, very sector and very stock specific. There were also some pretty poor results, which are really starting to reflect the sectors that are going to struggle, that are struggling now in Australia and that are going to struggle for a while into the future. But it was generally okay, our reporting season. Now, the significant problems that are looming are really twofold. One is, and I think everybody is pretty aware, that the mining construction boom, so not necessarily the export of increasing volumes of iron ore and coal and all those things, are going to continue, or I think they are. But the construction boom is winding up fairly quickly, and most of the significant projects are going to be complete by 2015. So that means that the capital expenditure is going to come to a grinding halt. Now, people have been talking for some time about the fact that other sections, the non-mining sections of the economy, need to pick up the slack. There's two obvious ones. Housing is one, and there's a little bit of that happening, but you can't expect the housing construction market to pick up what has been lost in the mining sector. And secondly, people were turning to manufacturing. But it should be becoming blatantly obvious now that manufacturing in Australia is in a lot of trouble. We've lost the automotive industry, we've lost the aluminium industry down in Victoria. There are problems with food processing. We've got Qantas laying off 5,000 staff, and these are all going to start to hit and come together from next year on. So it's going to be a bit of a perfect storm in a way, and it's going to affect a lot of the sectors of the economy. It's going to affect jobs, So that means it's going to go through into certainly retail, which is the largest employer in the country, and you need to be very, very selective about the sectors and the stocks that you invest in or you trade in, because there's going to be a lot of negative headwinds for a lot of sections of our economy, and that'll probably start to get reflected in prices in the latter half of this year. So let's just take a quick look at the Australian indices. So we'll start with the materials index first. So BHP and Rio, we had a really nice rally over the last few weeks, formed a new medium-term high. Did pull back sharply last week, as you can see, and that was really, again, just some more fears about China and what's going on there. This is the finance index. It did reasonably okay, and of course the overall ASX 200 is basically stalling out at around about this 54.50 level. Doesn't seem to be able to get through that level. Moving on now to precious metals. Gold gained just a couple of dollars on the week. Gold stock indices overseas, they did backtrack slightly, so gave back a little bit of ground. Silver also eased back. It's not surprising. Silver is quite volatile, so you've got to expect it to bounce around a little bit. Copper was down slightly to 321, but really there hasn't been much change there for quite some time. And again, oil still holding steady just above the $100 a barrel mark. So let's take a look at precious metals. This is gold. So we had a couple of up days at the start of the week, gave back a little bit of ground at the end of the week, but you can see there's a pretty good trend going on there. We need to clear through this 1339 level, which it peaked out at on Wednesday. So a move above there would be extremely positive, and then ultimately a move above 1440 would really clinch it for me in terms of a new bull market in gold. Silver moved ahead. It's still underperforming gold, which makes me a little bit cautious yet on precious metals, but they're showing some reasonable signs. And let's have a look at the GDX index. It was probably just a fraction weaker than the price of gold, but again, not a lot in it. So there's the spot copper, 6-month spot copper price chart. Not a lot of change there. And just reiterating what I've been saying over the last few weeks, and also which I highlighted in the webinar for those of you that attended the webinar on Tuesday night. The opportunities in America are really quite stunning in certain sectors. There are themes there that are unstoppable themes that are going to continue to march on irrespective of what the Fed does, irrespective of what the US government does. They're just terrific trends, and for anyone that's interested in diversifying their activity into America, where there are trends and there is liquidity and there are just so many good things happening there, it's not funny, then you might want to get in touch with me and have a chat with me if you're interested in broadly what we do. There's our website address. There's plenty of information on there. And if you want to get in touch, then there's my email address as well. So lots of good things happening, but also plenty of care needed at the moment. So that's it for this week. Cheers.